All right, we're ready to go here. Let me just move. I'm gonna X this chat out, kind of get to my, I'll leave it on the side. No big deal. Hold on. All right, guys, welcome. I appreciate everybody signing up. I really do. And like I've been telling you guys, I don't look at myself as a teacher in any way. I mean, one thing I do have is experience. I've been around this game for quite a while. I'm pretty old, as a lot of you guys know, but I can share a lot of that. I can share a lot of experience. I can, I've been looking at order flow and sentiment for a long, long time. And, a lot of times with members, I fall into the trap where I expect people to get a handle on things and to, get an understanding or a grasp on things quicker. And, it gets me at times, I stop and think, and I say to myself, I've been doing this a long time. I've been doing this a long, long time. So for me, it looks like it could be attained easier, but it's not realistic. And I think this is why I wanted to do this course. I'm being dead straight with you guys. I didn't want to pretend to teach people that I can show them how to trade and come out of this, being a profitable trader. Let me shut this door. You know what I mean? The mechanics of trading, because I'm a realist, and I know even myself, I had a tough time when it came to that stuff. And I can't fake it. I can't fake it. But one thing I can do with enough time and getting feedback from you guys, and that's another thing, what I want to do a lot more of. I know, some of these courses, they kind of leave the Q&A for maybe the last part of the course and stuff like that. I'm going to ask for your feedback, so save your questions though, because I might not be looking at them at that specific time. But I'm going to be asking you guys for a lot of feedback because I want each and every one of you, and that's why we kept such a tight group here, to really walk away from this, with what you came for, right? An understanding of sweeper activity and sentiment and the ability to put it into some sort of game plan when you're done with this, and something you could get excited about. So we're going to do everything in our power to get that done. All right. What I wanted to do initially here, and you guys got to work with me too, because when it comes to the timing of this thing, I'm really bad on timing. I don't know how long things are going to take, especially with this stuff. You can, as you guys know from prior webinars, I can sit here and talk shop with you for 5 hours straight, right? So depending on how much time we have each and every night, some stuff we'll get to that night. Sometimes we'll leave it for the next course. But what I wanted to do initially here is I wanted to quickly go over some of the stuff that you will be able to learn about through this course. Okay, some of the more important stuff that you will be able to walk away with and have a better understanding of and put it into an actionable plan. Just briefly touch on them, because the rest of the course we're going to take a deeper dive, right? We'll even go through examples of that day, action we saw that day, why it did this, why it did that, what should we have saw there, what we didn't see. And that's, hold on, let me do this because this will make my life easier and give you guys an idea. I'm going to post this here for now so I could use it. All right. So this is basically just a quick outline, and you'll keep my, see, this thing's not updating. Hold on. There we go. a quick outline of some of the stuff we're going to touch on, right? And what I'm asking from you guys, if you happen to see something not on here or something we don't speak about today, there's a good chance I just maybe didn't put it on here, but I want you at the end of this to bring it to my attention, because like I said, I want to make sure I hit on everything you guys feel is important, right? Especially those guys, those of you who have been around, the room or private Twitter, have some familiarity with it. Some of the questions or some stuff that you just can't get an understanding of. So I want to be aware of that so I can make sure I touch on it. All right. But this is what it's going to come down to, right? We're going to take a deep dive into flow, sweeper activity primarily, but we're going to go through all the flow and sentiment. Okay. And what you're going to realize, and this is how I initially looked at all of this, basically every question that I asked myself in regards to this information all stemmed from this, right? The who, what, why, when, and how. All right, every single question regarding this information, I've gone through all of this, and you're going to get an understanding of each and every one of those, okay, and why they're important. All right, so that's basically the outline for the course, right? So here are some of the examples. We're going to learn about, and we're going to talk about what exactly is flow, okay? And I know it sounds ridiculous to even ask that, but a lot of people, they know what option order flow is, but they really don't know what we're looking at. A lot of people come into the steam room, they look at the tote board, they think every single order, especially with size, is an actual bet. It's actionable. It means something to them. And the truth of the matter is, I don't know the exact numbers, but off the top of my head, I would say, at least 95% of the overall flow is likely useless to each and every one of you. Okay. And not only that, sometimes flow can be or look useless at first. Okay. But then when you get some more information, right? More buying comes in, or you start to see flow in other names in the group, whatever it may be, all of a sudden it can start to mean something, right? So that's what we're going to talk about. It's basically, the way I look at it is we're putting pieces of the puzzle together. Okay. The flow for me, it paints a picture. Each and every day it paints a picture, right? Sure, it could look like something one day, and 2-3 days later, come out to be something even more significant. Okay, but that's the way I look at it. Even though the order flow individually may not be actionable, right? I'm looking to put pieces of the puzzle together to get a better grasp on how the professionals out there are both hedging and wagering in the options market, right? And when I got into the game, the option market was primarily used for hedging purposes. Okay, that's most of the time. That's what a lot of the pros were using options for. Hedging positions, protecting positions. Now it's a whole different ballgame. Right now, there's a lot more directional wagering going out on there. Right, players are coming in and or trying to utilize the option market, trying to utilize leverage through the option market, right? So some of the best action, like we'll see, millions of dollars come into NVIDIA, and the likelihood whatever fund or institution, hedge fund player is behind those orders, the likelihood is they're already sitting on, a size position of the equity and just looking to grease it up a bit, right? So understanding that even though each and every order may not be actionable, but you still want to pay attention to it, because like I said, putting the pieces of the puzzle together are important. And we're going to spend some time and talk about that amongst each other here, okay? The who are the players behind the order flow? And, do we really know what the hell they're doing, right? So in regards to the who, we could be hedge funds, right? Institutions, pros. The one thing we know is that when it comes to sweeper activity, it's not the average Joe, okay? The average Joe does not have the resources to place the orders that we're focusing on, okay? So just that itself, right? Who are the players behind the order flow? We know they're professionals, and we know the likelihood is they have better information than a lot of us or a lot of the average players out there. Okay, so right there, we know it's meaningful information, right? We know it's meaningful information. There's substance there, okay? And, now these days we see more and more of all different types of orders from different types of players, right? We see algo sweeps that aren't even human beings, right? They're machines that are programmed to fire off orders based off sometimes news, sometimes buy programs, right? We see it in all sorts of things. We see it in ETFs, leveraged ETFs, individual names, okay? So the who, and we'll discuss that as we go through the importance and our rating system of the different types of flow out there, right? We'll go over who is likely behind these orders, okay? To answer the second part of this, we really don't know, who exactly is behind these orders and what they're doing, okay? But based on the information we look at, and what the information we're going to go over in this course, right? From just the simple characteristics and ingredients that make up a sweep, okay? We can get a best guess. We can take a highly educated guess that we can get an idea of what that player is looking to achieve by placing that order, okay? Sometimes, a lot of times, we won't, and that's the stuff that's not actionable to us, right? The stuff that we want to focus on, the stuff that we want to take action on, is going to be the stuff that we feel confident we have a good idea about what that player and maybe who that player is and what they're doing. All right, and just to give you guys a quick example, what I mean by who that player is. It's been a common thing now, more and more these days especially. We'll see aggressive sweeper activity coming in, decent size, continuously hitting a name, and then we find out Elliott Management took a stake in the name, or we find out Melvin built a position in the name, So when you're looking at the right action and you're paying attention to the right action, there is a way to find out or get an idea of who is behind the order and what they're looking to, what they're looking to achieve by placing these orders. Okay. So we're going to spend obviously through the course, and again, no exact order. You're going to see a lot of, like I mentioned here, a lot of repetition throughout the course. I give the example like a baseball player, right? He goes in the batting cage and takes thousands of swings, right? Maybe boring at times, but that's how you get, that swing down pat, that timing that pat. So where you don't have to overthink situations, right? Through repetition, whatever athlete, tennis player, hoops, right? How many shots do they go into the gym and take a day, right? So a lot of this stuff that we're going to focus on in this course and that you're going to do beyond this course is going to be repetitive, but it's worth it. It's worth it. because the less thought and emotion you can put behind anytime you got to hit that button, the better off you will be, right? We all know that. So that's ultimately where I want to get you guys by the end of this. What are we looking for on a day-to-day basis, right? What should we focus on? What makes this particular sweeper activity any more important than this sweeper activity, right? What does the spec activity tell us? The spec sweeper activity tell us? What does the momentum sweeper activity tell us? What does sharp aggressive activity and size tell us? Again, these are things that it's not too complicated, but you got to be aware of if you're going to play off the action and try to find any success. You know what I mean? And this is just a quick example, if there's momentum sweeper activity, right? And we've been seeing a lot of that. So in other words, action coming into a name, cheap and short dated strikes, just playing off the momentum. When the momentum dries up, you can't be sitting there hoping for, news down the line in the name, or just because you like the company itself, expect that flow to be right if the momentum is dried up already. So understanding exactly what the different types of orders and type of action we're looking at on a day-to-day basis, and what makes certain order flow that much more special than the rest, and why we focus on it. All right, so we're going to go over a lot of that, as you guys know. We talk about that a lot, right? The why. Why is there an edge from all this data and information, right? When you use it correctly. Not only, what is the edge, but understanding why it's an edge, right? Understanding the reason why it's an edge. And when you understand it clearly, right? And again, through repetition, that's where the confidence comes in. That's where the confidence comes in, to where, you buy something, it doesn't move right away, or you're underwater a bit, but it's that special action and why it's special, right? And allows you to either add into weakness or be patient in the name, right? So that understanding exactly why sweeper activity is significant and sentiment is significant and why it works. It's not crystal bullshit, as I like to say. It's not some magic indicator. There is a reason why, if you pay attention to this stuff and you use it correctly, you're going to find consistency and you're going to find profitability. All right. And obviously that's important. When does order flow become actionable and why? Right. So this is the when now. Okay. When does order flow become actionable? Sentiment, I told you guys, plays a huge role for me in a lot of the when. Okay. A lot of the when. And here's my story so you get an idea. I was drawn to flow from unusual activity, kind of like what the Nigerians look at, really, volume, unusual volume. I realized pretty early on that it wasn't that easy, and they were winners, but there wasn't much consistency there. And then as I fine-tuned it and started to lean towards sweeper activity, that's when I really started to pay attention to sentiment, because a big problem for me was not making money off the sweeper activity when the market was bullish. I had no problem doing that. Okay, and not many people have a problem doing that. I'm sure you all can agree. When the market's going up, you're going to make money, right? But it was sentiment that allowed me to hold on to the bulk of those profits when the clock expired. All right. When the market rolled over and went into a correction, I won't say always, but the majority of the time, sentiment was the reason why I didn't get caught. Okay. And I don't think you guys understand, if you're serious about this game, how huge of a role that plays as far as your P&L is concerned. If you can sidestep, right? If you could sidestep poor risk reward scenarios in the market, okay? And this is a market that can really screw up your head in regards to when the clock expires, right? This bull market seems like it never wants to end, okay? But over the course of the time you spend in this game, not even, every single rollover, but if you can just fine tune what you're doing already, and whatever you do is allowing you to hold on to that much more of the profits you make when things are bullish on the upside, it's an instant effect on your P&L. Instant. All right. Because my biggest problem, and a lot of you guys know this, is, the market would go higher and, I hit them pretty hard early, and, there was no rhyme or reason for me of when I was this aggressive again. I'd get aggressive here, depending on if I liked what I saw. I'd get aggressive here, I'd get aggressive here. And then all of a sudden, the market would roll over and, I'm taking a hickey. All right, I'm taking a hickey. And it would leave me scratching my head because flow never ran out. Sweeper activity never stopped. There was always some sort of call sweeper activity at the end when the music stopped. So it was impossible to just pay attention to the sweeper activity to know exactly when the music would stop. Okay. It does a good job of telling you when the momentum shifts. All right. And we'll talk about that. In other words, you got call buying all over the place, and then all of a sudden the market rolls over, and that call buying instantly turns to aggressive put sweeper activity. All right. But at that time, if you're in deep here, you're already taking a decent hickey, especially in options. Especially in options. So I needed to find something that would help me out with the when, because there was nothing I can do on my own. And I was just drawn to sentiment because I'm a contrarian at heart. That goes back from my gambling days and being around professional gamblers and seeing how they would make money. So it all stems from that. Okay. But, sentiment plays a huge part in the when. And when you're done with this, not only are you going to realize that, the thing you're going to have to work on is inserting that into your game plan. Because for some of you, it's going to be trickier than others. For some of you who are really active, you're really going to have to sit down and come up with an efficient plan on how you want to go about this. All right. But we're going to spend a lot of time and we're going to talk about it. But I just wanted to touch on it briefly. Right. Here we got another how both sweeper activity and sentiment can keep us disciplined when we lack it at needed times. You guys hear me talk about this word ad nauseum, seatbelt, right? If for that reason, like I just explained off this last topic here, I had no seatbelt. I never had any sort of seatbelt. There was nothing that would hold me back. If I came in and I see spec action, I would jump in just like anybody else, be as aggressive as I would be on any other given day. And I had no seatbelt. And no matter what it is, again, you've heard me say this, if you don't have something something that helps this in this game, you're dead. You're dead. There's no way to overcome it. There's no way to overcome it. You know? And it doesn't have to be as drastic as a lot of people think, right? I told you, like, what I like to do as almost like a blueprint to go off of is kind of, and again, we're going to spend more time on all this, guys. It's just stuff we're going to talk about, okay? But that funnel, right? That funnel effect. So when I have that fat pitch set up, when sentiment, that signal's at its strongest, right? And then I get the sweepers to confirm that setup, that's where I want to be most aggressive. Okay? That's where it's widest. And as those signals dissipate, right? Little by little, as you lose the strength of that signal, you're taking, less risk each and every week that goes on until you get this setup again. Okay? And yeah, you may get caught with something here. Okay? But if you were most aggressive here and a little less aggressive here, 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 when you get caught, you're going to hold on to the bulk of the money you made on that turn. Wow, that is some drawing I just made here, huh? But you get the picture? You know what I'm saying? Right? So that's kind of the blueprint. Again, it's no exacts. And, if you're that meticulous, like you could develop a really strict discipline strategy based off that, if that's what you need to stick with, okay? But it's not a necessity. It's not a necessity. Because what's likely to happen is if you just use this as a barometer, all right, there's going to be fine tuning along the way. So there's going to be a time you probably get caught a little more heavy handed than you would like, right? So the next time that situation comes about, that's going to be a refresher. That thing should be a refresher to, all right, this go around, I got to trim it down. I got to cut down the risk. I got to cut it even more, right? So it's going to take a couple of setups before, you find something you're really comfortable with, right? A feel. It's basically a feel. All right. But net, I mean, the name of the game is no matter what, right? And if you use this bull market as an example, right? Net, if you made money throughout this whole rally, okay, you have to be thinking here that no matter what chips you have on the table, you cannot risk giving all this back. You cannot. Picasso. You know what I mean? And I know it sounds pretty obvious, but go around and ask how many people are paying attention to that. They're coming in, and if they like names, chart look good, couple charts look good, they're going to put on as much risk as they can take. As they can take. So through, the sentiment and the sweeper activity as a confirmation, you're going to see how this all plays out, and will play a big role in seatbelt, managing your risk and helping you out with the discipline that a lot of us degenerates desperately need. Okay. A big why, we hear it all the time, all that action. Why did that bet lose? Why did that bet go down? Or why was that one such a huge winner? What made that such a huge winner? All right. We're just going to go over a lot of the why behind winners and losers, okay? And how much it matters, how much effort and time and focus we should put into it, all right? Because there are a lot of times when we should not be okay with a winner and should be okay with a loser. All right. What I mean by that is, I'll give you guys an example right now, right? Trip. If Trip goes down, I don't question it. You know what I mean? I'm not beating myself up for it. When I'm playing off that type of action, right? And I want to tail that action because I'm impressed enough by it. If it goes down, it goes down. It's part of the game. You know, I'm not doubting the action. There's a lot of luck in this game. There's a lot of luck. Okay, especially on the win side and size wins, etc. There are some things you can't control no matter what. And if you rack your brain focusing on it or trying to discover a way how, you are going to burn your brain out. All right. So simply put, for me, when there's a specific type of sweeper activity or there's a sentiment set up and I lose my money, I'm okay with it. The problem I have when I beat myself up is when I shouldn't have taken action and lost money. Okay. And what I'm telling you is that a lot of times people get lucky, they get bailed out, and it's the worst thing that happens to them. It's the worst thing that happened. So by either going against the signals, right, and getting lucky and holding through a pullback and getting bailed out or whatever it may be, they'll go, oh, yeah, nice hold, diamond hands. But in reality, you should have never taken all that risk to begin with, and you should be unhappy regardless of the results. This is such an underestimated thing in this game, patience, why and when we need to be patient and when we shouldn't have much patience. All right. This day and age, there's no such thing. People have zero patience. Zero patience. They're buying calls 6 months out and they're selling it 3 days later because it hasn't moved. You gotta have patience, right? Again, if you're firing off the right stuff, okay, you have to let it work, right? And a lot of times that whole goes down to interpreting the flow for what it is. If somebody's bombing calls 6 months out, not always, but the likelihood is they're going 6 months out for a reason. Either because they're anticipating a rough patch or non-movement, and they're looking to build a position through that, okay? Or, they're making a big bet on the underlying, the name, and the smart money, they don't do that in weeklies. They don't do that in front month strikes. Like I mentioned to you earlier, a lot of times with the professionals, the funds, the hedge funds, institutions, what they do when they come in and size up in a name, the likelihood is they're building a position in the equity, already have one already in process already. So if they're building a position in a name and making a bet on that name, they want to be patient because that's where you're going to get paid off that bet, right? Weeklies is all momentum and luck. That's all it is, right? That's all weeklies are momentum and luck. You have one down day off a headline that you didn't anticipate, and your weeklies are done. They're done. So if you you like Chewy at these levels and you really believe in the name, what the hell are you going to pay attention to what it does over the next week? It means nothing. Noise. So being patient and having that conviction and confidence behind the right action that is telling you to be patient is crucial. Okay? And then on the opposite of that, and this is just how we're wired, I think, players out there, they see somebody bombing 6 months out and they can't be underwater for a day, but weeklies, they're holding all the way to the expiration day. Right? You see that all the time. Or they get a move and they don't want to take profits or roll, or they get greedy. That's when you shouldn't be patient. Right? That's when you shouldn't be patient. You're already rolling the dice as much as possible in weeklies. The longer you hold up until that expiration, the more risk you take on and the more premium that's going to come out of it. So a lot of people out there, and you see it on a daily basis, they got this the wrong way, flip-flop. All right? So what we're going to do, and again, repetition, we're going to focus on what action means what, and then what it's telling us as far as patience is concerned. How to be patient, how to force ourselves to be patient. And a lot of this too, again, may be easier for me to say, but it's having the confidence in the order flow, in the sweeper activity. When you've seen enough top shelf sweeper activity cash a ticket, you're going to be patient. You know what I mean? You're going to be patient. When you see a new one chopping around, and every rally getting sold looking like shit with the whole sector, but then catch news 2 months later, you see enough of that and you're going to be more patient. But again, it all goes back to, right, understanding the order flow and having, understanding what it means, what's going on, having that confidence behind it. This we talked about the last few webinars when talking about the course. This is probably one of the most important things, I think, for the majority of you. The majority of you. How to utilize sweeper activity for intraday sentiment and as a momentum indicator. Why is it important? It's got nothing to do with swing trading. Okay? It's got nothing to do with position trading. But if you trade ES or just the indices, this is the most important thing. The most important thing for you. If you day trade off a watch list of yours, this is the most important thing for you. If you day trade, period, this is the most important thing for you. So a lot of this, even if you're swing trading, okay, because I think what a lot of people don't admit to, all right, is a lot of people, even though they say they're trading off the sweeper activity, okay, are not strictly just trading off sweeper activity, okay? They're picking and choosing based on what they like and when they like it. You understand? You pass on the last 3 good-looking sweeps, to buy this one because you like the name, or you like the chart, or you like the Elliott wave setup, or you like the Fibonacci's. That's what a lot of people, a lot of players do, especially when they first, are introduced to the flow or even sentiment. Okay. And understanding how this works and why it works can be an extremely powerful tool. Okay. Extremely powerful tool, because what this does is, on the sweeper activity side, it's the confirmation indicator that you didn't have prior. Okay. And we went over this and talked, but there's probably some new folk in here too, right? Again, I'm just taking an example here of one that moved today, just to give you guys an idea, right? If you're looking at WOOF, right? Which a lot of you were. Okay? If you're looking at WOOF, because you saw this thing catch action initially, right? Bumped up, little breather here. Who let the dogs out? Right? And now look, this is a pretty decent spot there for WOOF. No? So WOOF is on your watch list. You saw some volume come in with some sweeper activity initially. Maybe you played it, maybe you didn't. Now it's on your watch list. Okay? There is nothing, at least that I know about, okay? Nothing in real time that is going to tell you when this comes in. Okay? Nothing. No indicator out there is there going to be an instant reaction with momentum and volume. All right? But if you were paying attention to the sweeper activity today, right, and WOOF was on your watch list that you were interested in, okay, you would have seen a few sweeps at least initially come in, all right? And all of a sudden, this is something we're going to spend a lot of time on. What's your edge is that now, if the probability was 50-50 that volume comes in today and it starts moving, with sweeper activity, what did it do to that probability? What did it do to those odds? Right? At least bump them at the least 60-40 to your benefit. And again, it's not magic, right? And we're going to talk about the details and exactly why most of you are aware of it, but why this happens, okay? But, I mean, look what the hell happened to this thing. And obviously it caught a gazillion sweeps throughout the afternoon after that. But, this thing exploded. Exploded. All right? So, again, no matter what let's say you're even swing trading, looking to swing trade a WOOF, wouldn't you rather find an entry, when this thing is starting to heat up, rather than come in and buy it after the move? Right? So it doesn't necessarily have to mean intraday only, right? It's going to help you out with entries. If you already did the work and are using sweeper activity in the way I just explained, okay, you're using the flow as an entry indicator to get in before the momentum heats up and you have to pay higher. All right, so this thing here, where'd I go here? The how to utilize sweeper activity on and this is an intraday basis, all right, and sentiment. I think it's going to be one of the most important things for the majority of you, okay? And as far as even using sweeper activity for sentiment purposes, you hear me throughout the day many times, right? I'll talk about how the sweeper activity dried up or the pace of sweeps has slowed down, right? Why am I sharing that with you guys? Okay, because the likelihood is that's a signal to us that the momentum in the overall market is starting to dry up. Right? So you see, like, usually right off the open, you get those rips for like the first 20 minutes, a half hour. Sweepers going bananas all over the place. I'm dizzy. Right? And then all of a sudden, the sweeper activity slows down significantly. The flow slows down significantly. You know? And that's an indication, okay, if I was riding that moment, if I was playing ES off that momentum, off the open, now probably is a good time to at the least raise the stop. Right? At the least raise the stop. Keep a close eye on things. So that's what I mean by sweeper activity even being used for sentiment purposes. You know, this market's been a little tricky in regards to the overall market sentiment wise, okay? But even for sectors, right? We see certain days they're sweeping Facebook, Apple, and all the big guys, right? That's where sentiment's at. That's where the momentum is at. That's where you want to be if you're playing intraday, right? Or we see a market that's flattish and there's no call buying and there's some put sweeper activity there. It's giving an indication of sentiment to us. You know, a lot of times, if a market's selling off and there's no call sweeper activity coming in, I'm not stepping in front of that shit. You know what I mean? I'm not getting in the middle of that. All right, but, you know, if the market's selling off and all of a sudden there's a nice band of sweepers coming in or an uptick in sweeps, hitting Apple, SPY, some of the beta names that could get the market moving, right? And we'll talk about this too, using these tools. God forbid you got a niner or you got some oversold signals or a level that you're looking at and there's an uptick in sweeper activity. That's a solid entry. Why? Because the momentum is likely to shift. So again, we could spend a ton of time on this. I also got something that I would like you guys to do, especially some of you newer, the newer people in here, to really get a good gauge on how this could be extremely useful, extremely useful. Okay, what's this one? We got another why here. Why the sharpest edge from sweepers and sentiment is in trend changes, and what to look for, how to detect them. Okay, I can't explain to you the difference between sweeper activity into a trend and a signal from sweepers of divergence. All right. And again, I keep saying this, but we're going to spend time on this, so don't worry. But what I'm talking about is what I just mentioned to you, even in the last example. And you see even my style, how I'm so focused on looking for opportunities in accordance to those trend changes. Okay. What I mean by that is this. Okay. When you have a market rallying or an individual name, an underlying rallying, okay, and it's been rallying and we see sweeper activity coming in, okay, what's the sweeper activity telling us? It's bullish. We know it's bullish, right? We know it's already bullish. Okay, so maybe it's already confirming what we're seeing in the price action and what we're feeling already. Okay. The other thing that goes into it too, why are we seeing sweeper activity into strength? Okay, there could be a lot of reasons. People getting squeezed, forced buying, right? A lot of it these days is forced buying. All right. But when a market or an individual name is going sideways and is dead without a pulse, and all of a sudden aggressive sweeper activity comes in, it can only mean one thing. It can only mean one thing. And it's telling us something we didn't know, right? If that thing's dead and all of a sudden, or even selling off or weak, and all of a sudden they're coming in aggressively sweeping whatever that thing is, that's telling us that the momentum is about to shift. At least sweepers feel that way. And that's where some of the biggest moves, the strongest moves, stem from. You know, that's a significant, for me, like, that's the biggest edge from out of the sweeper activity, right? When Apple or NVIDIA has gone parabolic already and they continue to sweep it, it's not telling me as much as if something is dead, consolidating, or has been selling off and they're sweeping the shit out of it. Right? Nowhere near as powerful of a statement. So that's why, you know, if you're wondering why I look at a lot of setups like that, is because for me, like, that's where the sharpest edge out of this intel, this information lives. You know, the examples I showed you where, you know, like, even, again, I'll use an example of something here, right? Now, again, this is some flow with time behind it, but we've been looking at TRIP throughout this whole downtrend. All right? We were looking, TRIP, you know, this thing had a crazy run. People made money with it. You know, once it started to pull back, we all were interested in it again. How, you know, where do I know where this thing is going to turn? Like, for me, I have zero edge anywhere here trying to figure out where would be a decent spot to own this thing. Right? I'm sure people throw it here. I'm sure people throw it here. I'm sure people throw it here. So then you get the sweeper activity into extremely oversold signal here, right? With some time. So like I said, it didn't magically increase the odds that now this thing is going to go higher 100% of the time, right? But if it was 50-50 here before the action, what is it now with that aggressive sweeper coming in, bombing September's? That's the edge. Yeah, that's the edge. All right, so that's why I like these setups as opposed to the sweeper activity coming into the strength, because players are getting squeezed, rolling, you know, chasing momentum. That sort of thing. Oh, you guys, did I mention it? Everybody write, if you're gonna post in the channel. Is this not updating? I see you guys. I should have mentioned that. Did I forget to mention that? I kept reminding myself 55 times. Yeah. I just wanted to give a heads up there. All right. So, where were we? Oh, here, right? So the sharpest edge out of sweeper activity center. And, another thing I think is, trying to think of the word, but not looked at the right way, okay? Sentiment is a strong signal at extremes. Where players really run into trouble is when they're trying to make a signal from the in-between. You know what I mean? From the in-between. When they're trying to confirm a contrarian bias that they have and stretching out a signal where it shouldn't be. But when you get, and there's sentiment for different time frames, but for whatever time frame, when you get a washout in sentiment, especially going against the grain, meaning players are bearish in a bullish environment, there's some monster moves that get set up from that, as most of you are aware already. So again, something we're going to spend a lot of time on, because depending on your time frame, this immediate impact. All right, this point here, I can't put enough emphasis behind it. You have to be realistic. You have to be realistic, please. If you're not realistic in this game, you're not fooling anybody but yourself. All right? You have to understand that you're going to have losers. Everybody, you, me, the best of the best, everybody is going to have a loser. Okay? It's going to come no matter what, no matter how much discipline you have, no matter what type of action you're focusing on, there's going to be a loser. Accept it for what it is. Okay? And if you run into a loser or losers, a very common thing amongst newer traders is to jump ship immediately. Find something new. What they don't realize, you see this on Twitter constantly, whoever has the hot hand is where all the tweeps move to. But what the tweeps don't realize is they're going to somebody who already got hot. Now they'll likely cool off. And you're going to tell the guy who's cooling off, you just left the guy who cooled off who's going to get hot. Right? The complete opposite. If you're following somebody, you likely have respect for them because you think you know what that they know what they're doing and that they win more than they lose. So now you got a loser. You're jumping ship to go find the guy who's been red hot. It's a numbers game. It's a numbers game. Right? And the key to keep focusing on is to win more than you lose. Whatever it is. It's not even more winners than losers, because your style may be you're looking for those big trend change setups that are catalysts for big moves. Your win ratio may not be as efficient as somebody else next to you who's looking and playing off smaller moves, okay? But your win, the size of your win's a lot bigger. And you only need to win a certain amount of time for you to be well in the green. So it's not even the number of winners and losers. Okay. The main focus is to be wins. Whatever you're taking in on the profit side is greater than your losses net net. Once you get to that point, once you have the confidence that you can get to that point, you're there. You're there. Once you get to that point and accept it off whatever edge you're using, you've taken that big step that many people don't take in this game. Okay? Don't worry about sizing up. When you get that confidence that you can win more than you lose, you'll find a way to size up. Trust me. You rob a bank, you rob your sister's pocketbook to size up. But that's the goal. You know, that's the goal. And I'm more than convinced that when we get through this, okay, whatever style it may be, you're going to at least take away a few things that will increase the odds of you winning more than you lose. Okay? Exactly. Hanging around long enough. That's what it is. You know? You hang around. Because here's the thing, right? Even right now, even if you come to the conclusion after whatever it is, you're trading off sentiment or sweeper activity and using it with charts, whatever it may be, okay? You have the conviction that you are going to come out net profitable, but, you know, it's just not something to get excited about. You're not making enough money, okay? Based off just you being around long enough, you will be able to fine tune and do certain little things that will help that situation. Fine tuning. Okay. The key hump, the big hump, is getting to that place where you can find consistency and profitability and accepting it for what it is. Okay. It's a lot more difficult now because you go look on social media and there's somebody talking about 5,000% gains, or you go on Wall Street Bets and this guy took 5,000, turned it into 100, right? You hear all this shit and see all this shit. You don't get the end of the story ever. You're never there for that final chapter. They're not going to tell you that final chapter. And that final chapter is going to end the same way. They're all going to give back at least what they made, if not everything else. It all ends a certain way when you see those type of returns. It's not feasible to see those. It's impossible to see those type of returns consistently. You'd be on CNBC trolling Paul Tudor Jones if somebody can do that. You know what I mean? Like, just think realistically. So you gotta be a realist, okay? And whatever that means, right? It's you being honest with yourself. Listen, I really wanted to do this full time. I can make some money, but it's not enough money. I gotta continue to work until I build enough of a nest egg. Whatever that honesty is, that right? Being realistic with yourself is, you have to do it. You have to do it. But the main goal for anybody who's new or hasn't got to that point yet already is to become profitable over time. Not just this week and next week, not just the last few months, hell, not even this bull market, but over time. Over time. Again, there's many folk that make money in a bull market like we've been in. Many. And there's going to be many that get destroyed when the music stops. You know, if you're looking to be around in this game, right, or whatever someone just mentioned, hanging around long enough, you know, you got to be able to weather that storm. You know, weather that storm. And if, like I say, you're chasing unicorns, and what I mean by chasing unicorns, looking for that stock picker that never loses, or looking for that system that never loses, you know, it's going to bite you in the ass the hard way anyway. All right, I got a couple more here, and then I'll talk to you guys a little bit. I'm bad with the timing. I don't even know what time it is. I'll talk to you guys till like 1 in the morning. Is that cool? 1 in the morning is good for you guys now. I tell people the webinars that we hold on Sunday, Wednesday, they go for like 2.5, 3 hours sometimes. All right, so here's just a couple more things I just wanted to touch on quickly. Again, today I just wanted to keep it almost an intro type, but just so you guys understand of what, you know, again, realistically, and I've been using that word a lot, but realistically, what we're going to be looking at and what you can walk away with, okay? Right? So this is not, I can't do this for you, okay? I'm sorry, but I can't. All right? No matter if you understand and nail down every single thing that we go over in this webinar, in this course, I'm not going to be able to turn you into some rock star trader. I couldn't, again, you're not going to hear this from people, especially people who are doing a course. I couldn't do that for myself. You know, that's why I do what I do. All right. I give you guys the example. Bitcoin, I can't trade it. Why can't I trade it? There's no sweeper activity, and I don't have the confidence in the sentiment that's out there on it. I can't go and just trade Bitcoin and have the conviction that I'm going to be profitable. No way in hell. You know, there are people out there, okay, I've been around the select few who can trade anything, okay? Some do it for years and they can't last. That's how difficult it is. You know what I mean? That's how difficult it is. Trading both the long side, the short side of anything. All right. Again, this is something we spoke about on prior webinars. You're going to come to the crossroad. Oh, that's not a crossroad. You're going to come to that crossroad, I promise. And you're going to realize you're that one of few. Some people say 1 in 10. Might be even less than that, yes, me. Of those traders who are just wired differently. Can get long when nobody else wants to get long aggressively, and can get short when everything looks super bullish, and sit through pain and agony. Okay? You're going to know sooner than later if you even have a shot of being one of those, okay? Or you're going to have to find something that does the majority of the work for you on that end. Okay? We are not wired to play this game. Psychologically, emotionally, we are not wired properly. Okay? When we poop our bloomers, that's when we're supposed to be the most confident and aggressive on the buy side. When we want to own everything, we're exuberant and excited and super bullish. That's the time when you're supposed to chill out, relax, and not do much. And sit out from slapping high fives with your buddies who are talking about all the things they're up in. We're not wired that way. You know, and that's the problem. You know, that's the problem. All right, so you're going to come to those crossroads. It's worth a shot to see if you're wired that way. It's worth a shot. Maybe you are. But you got to be dead straight with yourself and stop pretending like 99% of the people on social media. You know who those people are just by the way they talk. Just by the way they talk. Because they use this word over and over and over again. Didn't I tell you that was going higher? Did you see the stock I just picked? I called the bottom. I called the top. That's what you hear them talk about all the time. You're not going to hear that out of my mouth much. You're not going to hear that. Why? Because it's it's the sweeper activity that got me involved in that name. I didn't pick shit. You know? Sentiment got me looking bullish when COVID was running wild and New York was on lockdown. I was shitting my pants. I didn't see the light. I couldn't. You know what I mean? And I was in the bunker. I was ready to get in my bunker. You're right. Right? And the reason why this, again, I have the conviction in this and why I know it works is because, as you guys know, I've been in the game, I don't know how many years now, 20 something years, okay? And I got people who I spoken to people and been around people who have been in the game even longer than that. And we all agree, this game was designed a certain way, and no matter what, there are little changes here and there. Okay, like even now with technology and social media, more people have access to more information. It wasn't like that when I got in the game. So there are things that change around it, but it stays the same. And what I mean by that is, no matter what information we get, that we see and we talk about, there are always players out there that are sharper, smarter, quicker, and have access to the information that we will never get our hands on. Ever. Okay? It's been going on for a long time. A long time. All right? And the other thing, right, is the one I spoke about just a couple of minutes ago. We are all wired the wrong way in this game. And that's why when you see all of us agree, it usually goes the other way. Right? Most of the time, almost all the time, it goes the other way. We just had a perfect example right in front of our eyes. Right in front of our eyes. Okay? With this whole inflation interest rate thing. Everybody and their mother's, father's, sister's, uncle swore inflation was getting out of hand, rates are going higher, just based off the reopening of the economy. By accident, rates are going to go higher. You don't want to touch anything NASDAQ related. Forget about tech. Don't you dare go long tech, whatever you do. Commodities would continue to go parabolic, and the Fed's caught behind the 8 ball. Okay? It all very well may turn out to be true at some point. But because everybody was looking and talking and seeing the same exact thing, what happened? You can't make it up. The total opposite. And there's no reason, right? Everybody who was making that case couldn't even find a reason for it to not work out like that. So they happened to be right there, but it didn't matter because everybody was positioned for the same thing. The total opposite happened. And once the total opposite started to happen, now everybody who's positioned on one side expecting the same thing, what do? They got to scramble to get to the other side. And that's what we've been seeing. We'll talk about Sharpies. Sharpies were making the same claim. Sharpies are short the S&P 500 and long NASDAQ. You know what I mean? We'll talk about all that. And Russell, yes, and Russell. But we'll talk about that. You know, but even, Gio, even honestly, you'll never see Sharpies really on the same side. That's on that side. And that's where I think you're saying it was confusing. But even when you see guys like Tepper, Paul Tudor Jones, all right, here's another example, okay? You guys remember the COVID lows. I don't know if you remember how bearish Paul Tudor Jones, Tepper, you name them, how bearish they all were. So when everybody's on one side of the fence, it doesn't matter. It doesn't matter, It doesn't matter. Because the positioning is so extreme that they're already positioned for it. You know what I'm saying? They're already positioned for it. Everybody's already made the move. So again, we're going to go over all the reasons why. Again, it's not crystal bullshit. There are reasons why when things are at extreme like that, things start to move the other way. There are reasons why when it comes to positioning. All right. And just quickly to sum it up, guys, and again, you've heard this before, but when you're done, one of the main things to go along with some of the stuff I said earlier, I want each and every one of you to have a blueprint of what your fat pitch setup looks like. Okay? What I mean by that is you're going to know exactly what type of sweeper activity you would need to see, you want to see, and if sentiment has to play a role and on what time frame. Okay? So that blueprint, and I like to do this with a lot of things I do, okay, is nice to have because anytime you're unsure about a particular setup or action that comes in, how strong is it, what criteria does it meet, you have that to base it off of. You know what I mean? So the closer the setup you're currently looking at comes to the blueprint, the stronger the setup you have is. You understand? The more you move away from that fat pitch setup of yours, the less stronger it is. So I want to make sure we get that nailed down as far as sweeper activity and sentiment on whatever time frames you guys are trading at currently. And even if you're not trading individual names or certain time frame, I recommend, well, you're going to have the recording anyway, but I recommend paying attention because you may decide to change, that style down the road. You may be solely day trading now, or you may be solely swing trading now, and down the line you become a day trader. Maybe you have more funds. Maybe you want to take less risk. You understand? So even if it doesn't, sync up with what you're doing exactly now, I recommend you're paying attention. Okay, one more thing, and then we'll wind it down. What I'm going to try my best, because you guys got to understand, I'm going to try my best to get those of you, I'm sure there's enough of you, that want to be able to figure this stuff out on your own. There's going to be some of you who don't even want to be bothered, okay? And that's why you're a member of the Steam Room or private Twitter, whatever it may be, okay? But I'm sure there's going to be a few of you who want to be able to at least start the process of working on this stuff on your own, okay? The only issue that comes into play is that to have the proper tools to do this on your own, okay, all the tools aren't free, as you guys are well aware. Okay, so you got to understand that, right? I can tell you exactly where you can get certain information, where you can get maybe free information that could be useful if that's what you're looking to start with, that sort of thing. But I'll tell you this, and this is the God's honest truth. If I had the confidence, okay, that somebody can do, like I love what I do. You guys know that. It's a passion. But if I had the confidence in someone or something out there to look at the stuff that I look at and do the legwork for me, boy, I'd do that in a heartbeat. I do that in a heartbeat. All right. So you have that luxury. You know what I mean? Even if you want to learn and get the process started of doing it, on your own. But I just wanted to make that clear so I don't mislead anybody, because I'll give you a quick example, like for the flow. Okay. If you weren't a member of the Steam Room and you wanted to read the flow yourself, you can't do it on Thinkorswim. You can't do it. I know there's some people who pretend they can do it. You can't do it. It's impossible. So, there are other outfits out there, but like Trade Alert is the only one I really trust. So that sort of thing. But again, if you guys have questions about it, ask away and I'll be more than willing to answer. Also, towards the end of the course, because a few of you were asking about it, we'll go over some of the add-on indicators that I use alongside sweeper activity and sentiment, right? The DeMark signals, this oscillator, stuff like that. I'll try to guide you as best as possible how to set it up on Thinkorswim and TradingView. All right. I'm going to try to put something together so I can just send it to you on TradingView, maybe even Thinkorswim. I'll get working on that. Yeah, this. Oh. the actual order trading alert. Yeah, we'll look at that, definitely. Definitely. We're definitely going to look at the trade alert orders. And just so you understand, like, I don't know if I should be talking about this, but, these are what the orders look like. This is off trade alert. So it's this information here that we're going off of. Okay, but again, there's meaning behind some of this stuff, okay, that I want you guys to understand and know what makes certain orders more important than others. Actionable, yeah, and that sort of thing. Why these bets will hit the top bet list and another one didn't, and you're wondering why. When they are actionable and when not. Yeah, that's Mike, that's one of the most important things. That's one of the most important things. And depending on what you trade, it's going to be different for each and every one of you. But even your members, I give you little tidbits. Just pay attention to what I'm even saying about the action that could just mean actionable to you. Yeah, that a lot of people say that. A lot of people say, based off just reading the commentary I put about the action, or stuff the way I'm explaining the action coming in, tone of voice, exactly. I day trade equity, Jay. Sometimes I'll hold equity overnight, not long, but I swing trade calls. I swing trade calls. So basically how I got to that was I always day traded equity. I never day trade options. I used to swing trade. I'm an equities guy. That's the most ironic part of all of this. Like my whole career, I traded equity, swing trade, day trade. When I was managing client money, it was all equities. But what I've started doing over the years is I like to swing trade calls off the top activity out there with some time. So anything short term, I like to lean towards the equity, and intermediate term stuff, I go with the options. Thank you, Petra. I like to go out at least 3 to 6 months. That's generally what I like to do. But again, that's just a preference of mine, because again, some of the better action I want to be more patient with. And I can manage my risk pretty efficiently with options. When I'm playing equity, I have stop losses. You understand? I'm being more tactical when I'm trading equity. I mean, it all depends, Game Pleb. It all depends. Large capital, I don't even know what you mean by that exactly, but this is a different era. I didn't know any newer trader, on the retail end that they weren't allowed to trade options. They weren't even allowed to trade options. So everybody started with equity that I knew. But you don't have to. I think the most unused aspect of options that a lot of newer traders don't use because of size and they want to make a score when they should be focused on just nailing down their strategy and finding consistency. There's no better way to manage your risk than options. Very simple. You can put in what you're willing to lose. That's your stop loss. Takes all the emotion out, guys. All the emotion comes out. All of it. Now, for me, especially if I'm a newer trader, that is huge. That's huge, right? The downside to that is what? You're not going to make as much money on the upside, right? Everybody's so focused on how much they're going to make instead of worrying about protecting their own capital. And you have to start off there. You have to start off there. You can't, if you got your eyes on the prize, you're looking for how much you're going to make and all concerned about that, not worried about what you're risking, you're heading down the wrong path. You're heading down the wrong path. Thursday after CPI, no matter what I touched, went south and still underwater, but sentiment wasn't that negative. I'm trying to think, no run, where the CPI, what day was that? Thursday. Oh, yeah. Well, again, this is stuff we'll talk about. But if you're paying attention to that short a time frame, like this is something you probably want to pay attention to, right? And this is Thursday. If you're concerned with that short of a time frame, which you probably are because you're pretty active, Novarine, right? You're pretty active. So yeah, see what I mean? Like this is something you really want to pay attention to. This is something you really want to pay attention to. So, again, that's this course, that's what this course is all about. Just getting you guys looking at the right things. Yeah, well, there was a lot of momentum, and listen, it's a weird market too. It's a weird market, not everything is going up and down together. Crazy rotation out there right now. Crazy. Did I miss any questions here? I gotta go. Day trade, swing trade. I think I answered that. Did I miss anybody? Mock alerts. We can talk about mock. Mock for me is not really anything actionable for me in itself, but if it goes along with sweeper activity, it's like an added bonus. We could definitely go. We could definitely talk about that. Yeah. Who did I miss? Jules? Where's Jules? I don't even see her on here. My dog Jules or this Jules? My dog Jules has a question. Last minute. Sometimes, Barajas, sometimes you get those sneaky sweepers late that you'll see some action after hours. Like I wonder, is Woof trading? If you're going out 3 to 6 months and market do you average down? If I'm going out 3 to 6 months and this is something we're going to talk about. We're definitely going to discuss Jules in a lot more depth. All right, a lot more depth. But it depends. It really depends. It really depends. Me personally, I really don't like if a market, you happen to play something near a top and all of a sudden the market corrects. If it's an individual name, I rarely like to average down at that point because I'm so focused on the newer names that come out of that correction. I rather you get more alpha from the new sweeper activity that comes from the pullback. But we'll definitely talk about all that. Okay, we'll definitely talk about that. And like I said, don't worry if you didn't get a question in or a suggestion. We're not going anywhere. We got quite a few courses. Anything that comes to your mind, shoot it over, and we'll tackle it. All right, guys. Good, awesome. Enjoy the rest of your night. I'll see you mañana in the morning. Good night, guys.